All right, guys, what's going on? We are going to try something new. I'm calling them Breakdown Bites or Breakdown Unscripted, but basically I'm going to try to return to the roots of the breakdown as a show that had visuals too and make a version that's specifically for YouTube. It'll be shorter than the podcast version, which you can still get on YouTube or wherever you listen to podcasts, but I think this might be valuable as well. And so today, obviously, is Thursday, March 2nd, and the big news is the total death spiral of Silvergate Bank. And so we're going to talk a little bit about where Silvergate came from, why it's important, why it's crashing, and what it means for the crypto industry. So Silvergate was, for most of its life, a tiny community bank. It had 3 locations, less than $1 billion in deposits, and basically just helped people get mortgages, sort of a standard community type bank. In 2016, it hired this guy, Alan Lane, and Alan saw that crypto companies were having trouble getting banked in the US and decided to do something about it. Classic entrepreneurial behavior. See a gap in the market and try to fill it. He got permission from the Federal Reserve to provide basic banking services to Bitcoin companies, and over the next few years, they grew from 20 crypto clients to over 1,000. They became, in fact, a pretty endemic part of the crypto ecosystem. Back then, banks didn't want to work with crypto companies, and so when Silvergate stepped up, lots of crypto companies came flooding in. Part of their innovation was something called the Silvergate Exchange Network. And this was something that allowed companies who had accounts with Silvergate to move dollars around, move fiat around after hours, 24/7, near instant settlement, which obviously is much more reflective of how the crypto industry works than trying to get it sort of pinned back on the traditional financial system. So SEN plus all of these other sort of crypto-focused features made Silvergate the bank du jour for crypto companies. In fact, as you can see, this now taken down testimonial that used to be on the Silvergate website, Sam Bankman-Fried, the disgraced former founder of FTX, says, "Life as a crypto firm can be divided up into before Silvergate and after Silvergate. It's hard to overstate how much it revolutionized banking for blockchain companies." Really a huge portion of companies in the crypto space were banking with Silvergate. In fact, at SEN's peak, they said something like 75% of the total addressable market was banking with Silvergate. Now, the problem started, of course, last year when the problem started for all these different institutions. In the wake of the FTX collapse, there was a huge bank run effectively on Silvergate. Something like $8.1 billion of deposits fled out of the company in December. They had to turn to an emergency loan from a local banking institution, and it was just a bloodbath. Now, they survived, but they didn't survive without reputational harm. The politicians in particular really came for them. And if you've listened to me talk about Operation Choke Point 2.0, this is kind of part of what we're talking about. In the wake of Silvergate's bank run and in the wake of FTX in general, senators from across both aisles are demanding to know what Silvergate knew about FTX and Alameda Research. And I think that there are reasonably a lot of questions here, even if I don't necessarily agree with all of these particular individuals in their normal crypto sort of thinking. But in any case, the point is that Silvergate was having a really tough time. They were in the targets, the sight lines for people who thought that they would be the next institutional failure, particularly short sellers like Mark Cohodes, who in the wake of him having been correct about SBF and FTX has been really targeting Silvergate. Now, that brings us up to this week. Silvergate delayed its 10K report, and in so doing caused its stock price to go down even more than it's already been. And if you look at Silvergate's chart, it was already having a terrible year. But yesterday, they announced that they would not be sharing their 10K, which was due this week, asked for an extension, and said that they were even looking into the viability of the company as a whole, not just whether they could service crypto companies, but whether they needed to actually shut down entirely. Now, this has had some pretty dramatic consequences, and those are the consequences we woke up to this morning. First of all, the big one was that Coinbase at 8:23 a.m. announced that they would be leaving Silvergate. They would be moving over to Signature Bank, which, by the way, announced in December that they would also be reducing their exposure to crypto, and in February said that they would only interact with transactions that were over $100,000 from crypto exchanges. So it's not like Signature is just a panacea for all of the ex-Silvergate clients. Anyway, Coinbase leaving Silvergate had huge impacts right away. It led to the price of Silvergate going down to under $7, its lowest price since its IPO in 2019, and it led to a host of other companies also jumping ship. Paxos, Galaxy, And just most recently, about an hour ago, Circle have all announced that they're leaving Silvergate. And this is what I mean when I call it a death spiral. So what's happening is that we're in a situation where, first of all, a bank took advantage of an opportunity that didn't exist before to bank crypto companies that were really underserved by the market. Because of that, it got huge inflows of deposits. It shifted its business to be entirely around crypto. And then at the peak, it was incredibly successful. It went public and it was sort of flying high. It introduced new features, including lending against Bitcoin, which it did for MicroStrategy. However, last year, we saw, of course, huge outflows from the crypto industry, huge sort of institutional failures that flowed from credit crises that gripped the industry, and Silvergate was caught up in that. It had a huge amount of deposits leave. It has big questions about the viability of its business model. And on top of all of that, it has intense regulatory pressure. Remember, we're in something that we've called Operation Choke Point 2.0, where major banking regulators, including the OCC, the Federal Deposit Insurance Corporation, and the Federal Reserve have said that it's unlikely that that banks are going to be able to interact with digital assets in a way that meets sort of the requirements of safety and soundness that they're looking for. And so Silvergate is sort of exhibit A in how that failure, or how the flight from banks to get out of the crypto business is going to happen. And it's bad. It's bad news for the industry, given that there aren't really alternatives. We're in a situation where, once again, just like before Silvergate started servicing companies in 2016, there just really aren't great alternatives. It's not like these companies have another waiting institution that's ready to sort of do what Silvergate Bank did for the crypto industry. And on top of that, the fact that it is likely now to fail based on all of these companies pulling their deposits is likely to only increase, to be a positive feedback loop and reinforcement for the crypto regulators who say that this is exactly the problem, right? Tier 10K here jokes about Gary Gensler, the head of the SEC, fuming when he finds out we blew up a bank. But in some ways, it feels like what they want. It feels like a self-fulfilling prophecy. And I'm not here to defend Silvergate. I think that there are major questions about how they interacted with FTX and Alameda that I hope come to light as part of these investigations. I also think that they made specific risk management decisions that may have put them in a situation where they were more vulnerable than this. But I do think that at a fundamental level, the issue is systemic, not just with any one institution, which is to say that if crypto was allowed to be a part of the banking apparatus, if the Brian Brooks era changes to banking regulations, which made it so that banks couldn't deny legal industries banking on the basis of what industry they were in, we'd be in a very different situation. There would be an actual market for and competition for crypto banking business, which would mean that no bank would have such a huge exposure like the signature banks and the Silvergate banks of the world did. And so that's where we are. It's not a good time, but it's an inevitable part of the unwind after 2021 and 2022. And so anyways, guys, if you want the full story, the podcast comes out later. It's obviously goes into much more detail than this. Let me know if you like this. Hit me in the comments. Let me know if you want shorter than this, if this is the right length, and we'll see if we can do these more regularly. Peace.